Ooh, what's going on, my fellow stock market investor and trader homies? It's your boy Kevin, and welcome back to the channel. The stock market is down big on the day. We're currently down about 1% in the S&P 500. Same goes for the Dow and the NASDAQ. Just coming off of a week that's been absolutely miserable. We're wrapping up the week here on Friday, and in today's video, we're going to be talking about why all of this is going on. We have some big major blue chip stocks that are down over 20% on the day. These are stocks that typically trade in a range of just 1% or 2. They're big major companies that are down 20%. And these stocks are in a sector that are leading indicators of how the overall market is doing. This is not a good look, folks, and we're going to be breaking it all down in today's video, so you're going to want to stay tuned for this one. All right, so we got the S&P 500 chart pulled up on the screen. We had this major sell-off back here when we sold off from 452 on the SPY all the way down to 360 over the course of about a month and a half. We found a bottom down here, and it was looking like this whole move right here could have been a bear trap. And we rallied back up. We rallied back up all the way back over 425, heading up near 430. And just over the last couple of weeks, it's been absolutely a big, giant bloodbath straight out of Dexter. It's been ugly out there in them stock market streets. Today, we're down about 1% or so right here. And on, I believe it was Wednesday, we had a really big red day, down over 3% in the S&P 500. So we're going to be talking about why this is happening and how we can avoid losses and actually make some money. One of the leading indicators in the stock market is how transportation and delivery stocks are doing. Why? Because if you're buying stuff, if a bunch of people are buying things online or in store, they need those items delivered. So we can look at these delivery numbers and kind of forecast how the overall market is doing. If the FedEx, UPS are doing good, then people are buying things, the economy's thriving, and we can expect the market to do well. If FedEx and UPS are doing bad, we can expect the economy to not be doing so good. And look at FedEx today. FedEx is currently down over 20% in today's trading alone. It's been a bloodbath out there for delivery stocks today. And FedEx, boom, a big major jump off of the cliff, down over 20%. Amazon stock down over 3% on the day, following the footsteps of, and UPS is down about 5% in today's trading. This all comes after FedEx withdrew their guidance. Their guidance initially was looking pretty optimistic. It was looking pretty good, but FedEx executives came out today and they withdrew guidance altogether. Shares of FedEx plunged 24% after the shipments company withdrew its full year guidance and said it will implement cost-cutting initiatives to contend with soft global shipment volumes as the global economy significantly worsened. Transport stocks are typically seen as a leading economic indicator, and FedEx pointed to weakness in Asia as one of the main reasons for its negative outlook. Shares of other shipping rivals such as UPS and XPO Logistics dropped 4% and 7% respectively, and Amazon stock fell 3%. So, investors, traders are theorizing that because FedEx is lowering their guidance, this means that people are not spending money. They're not going out and shopping. They're not going out and buying things. Therefore, FedEx doesn't have as many deliveries. If that's the case, a company like Amazon is probably going to be struggling as well. So investors and traders are selling Amazon. They're selling FedEx. They're selling UPS. FedEx announcement comes soon after a hotter than expected inflation report in the U.S. on Tuesday, which raised concerns that the Federal Reserve will be forced to cause a recession to cool prices. We are seeing inflation like we haven't seen in a very long time. The Federal Reserve may raise interest rates more than we already expected, and we expected drastic interest rate rises. This is getting crazy out there, and things need to be cooled off. What caused this? Well, it's pretty simple. The Inflation Reduction Act is what's causing the stock market crash, in my opinion. I think this is one of the worst bills ever to be created and put into legislation. It is absolutely terrible. It is a joke. All right, so here's what happened. We had the pandemic. We had the Rona pandemic, and the entire economy was shut down. In order to jumpstart the economy, there had to be some money shot back into the economy to get things going again. I get that, but it was overdone. It was overdone by probably 5-10x. It was well overdone, and inflation went nuts. We all know this. Inflation went nuts. And what happened next is we had to tamp down the inflation. We had to get it under control. So what does this administration do? They enact the Inflation Reduction Act, which actually makes inflation worse. So this is straight from the whitehouse.gov, and let's go look at this bill and see what it actually entails. The Inflation Reduction Act lowers prescription drug costs, healthcare costs, and energy costs. It's the most aggressive action on tackling the climate crisis. Is that really what we need right now? Sure, I agree. Climate change is not good. We need to protect our environment. But shouldn't we get inflation under control before we start talking about climate change in a bill? The two are not connected at all. There's no correlation. The parallel makes no sense. All right, so it'll lower the deficit and ask the ultra wealthy and corporations to pay their fair share. And no one making under $400,000 per year will pay a penny more in taxes. That's actually not true, because these corporations are who employs us middle-class Americans. And when companies have to pay more taxes, wages will get cut and people will lose their jobs. The market knows this, and that's why the market is selling off. Also, we're going to incentivize prevailing wages, the expanded tax credit for energy efficient commercial buildings, the new energy efficient homes, and electric vehicles. I love electric vehicles more than the next guy. You guys know that. You guys know that I love me some EV stocks. But is this really what needs to be in a bill trying to tamp down inflation? Stop companies from ripping off workers. It will penalize companies that promise to pay prevailing wages but don't follow through, and workers who are owed prevailing wages will receive the difference plus interest. So anytime the government gets involved in the economy, it's a bad thing. We know this from experience. Make it in America, yeah, right. That's going to happen. And then we have make the tax code fair. All right, so the top 10%, we know the stat of taxpayers are already paying like 99.9% of taxes. So the tax going after companies, going after corporations, small businesses, and making them pay more is not doing any good. If you're not making a lot of money, if you're making $50K a year, you're already not paying any taxes. You're already not paying a penny in taxes. I don't know who they're going after, but they're hiring a ton more IRS agents who aren't going to be doing anything. They're going to be overpaid and underworked. These IRS agents, anytime you add a federal employee, that person is very hard to get rid of. They're never going to be fired. They're going to be lifelong federal employees living off the government's tit, and the taxpayers who they were hired to go after and basically attack are going to be the ones paying their salary. This Inflation Reduction Act is just making inflation worse. Instead of going after the root cause, this was basically a way to get his Build Back Better bill through and get it shoved down the American taxpayers' throat. This is a travesty. We need to get this inflation under control, and I would hate to see a 2007, 2008 level recession. I'm still holding strong. I'm still cost averaging in to this market, but it is scary. I'm going to be honest with you guys. It's scary. I don't think this is the bottom. I don't think 360 on this S&P 500 was the bottom. So even with all that's been done to try to slow down inflation, look at the interest rate hikes. A little more than a year ago, you could buy a house for about 2.5% interest. Now you try to go buy a house, you're looking at 6% plus. That reduces the buyer's buying power drastically, even with all the stuff that's been done. The so-called Inflation Reduction Act. Even with all that rent, furniture, meals at restaurants, and visits to the dentist are all still growing more expensive, along with pretty much everything else. Inflation climbed to 8.3% on an annual basis and still rose by 0.1% from the prior month. So even with all the stuff that's been done, we're still seeing inflation go up. That is insane. Do you guys realize how insane that is? What do we have to do to get it to net, to get it to just neutral, no inflation? What do we have to do? Do we have to raise interest rates to where a home buyer's paying 12%? Maybe. We very well may have to do that. And if that's the case, things are going to get crazy out there. So I don't want to make this a FUD video, just try to spark fear. We have to keep buying, or I'm going to keep buying, because we don't know when the bottom is going to be, and we want to get that cost average. We want to get those buy the dip situations. We got to keep buying, because I don't know. I can't predict the future. Maybe the market's back up at 450 in the SPYs this time next year, and this is the bottom. I'm not saying a crash is coming, but it is starting to look ugly. And I will say that I don't trust this administration to make it any better. So yes, I'm going to continue to buy the dip. Let me know in the comments. Are you guys going to continue to buy the dip, or is this market heading lower? I love all of you guys. Get 15, that's right, 15 free stocks valued up to $2,000 each with my link to Moomoo, which is the broker that I use every day. Link in the description. That's up to $30,000 of free money. You can't beat that deal. I've partnered up with Moomoo. They're offering to the Touchdown Trades community the best sign-up bonus in the business. So get your 15 free stocks, link in the description. And remember, let me know what you think. Is this market hit a bottom? Is this past week the end of the pain? Or is this just the beginning? I love you guys, and I'll catch you in the next video. Until next time, deuces.